The Japanese yen has fallen to its lowest level since April 2009 due to stimulus measures unleashed by Japan's central bank. Joining me on the line to discuss this further is Gavin Redknap, emerging market currency strategist at Nikko AM. Thanks for joining me, Gavin. What danger does the falling yen pose to Japan's economy?
Sure. Well, the usual risk that most economies face from a falling exchange rate is, of course, inflation. But in Japan's case, that's exactly what they want. The new Prime Minister Abe has given the Bank of Japan the task of getting inflation of 2% from a currently negative level, and the Bank of Japan has basically thrown a load of money at that. Now, the real risk is that those policies don't work and Japan doesn't see a rise in inflation to that level. We're really in the situation of what we call kitchen sink macroeconomics, the huge amounts of money being poured into the economy on both a monetary and fiscal level, and if that doesn't happen, you wonder where Japan can go from here, to be perfectly frank.
Off the back of a falling yen, Japanese investors are flooding into European bonds and elsewhere in a bid to snatch up higher yields. What effect is this having on financial markets?
Well, there is money certainly coming out of Japan, but interestingly enough, there is a lot of money actually flowing back into Japan, because the Nikkei has risen 40% since Abe come into the Prime Ministership. It's risen 20% year to date. So a lot of money is actually going back into Japan. The Bank of Japan has weekly data, and of the 18 weeks since Abe returned to power, 70% of the time the Japanese have been net sellers of bonds, and 90% of the time net sellers of equities. That said, at some point, Japanese will rebalance their portfolios and start to look to put money abroad. When they do, of course, that will mean a huge flood of money out of Japan. Japan is very underinvested in terms of global markets. Once that does happen, that obviously will have an effect of pushing up prices because of that sheer demand coming out of the Japanese economy.
And what risks could a weakening yen inflict on markets?
The combination of Japanese investors putting money increasingly abroad, and if we do see a resumption of the carry trade, which is foreign investors going to Japan, borrowing money in yen to fund investments abroad, that could have a significant effect in pushing up asset prices globally. Now, we've seen for the past 2 or 3 years, especially in emerging markets, what's been called a currency war, where governments have been trying to put up barriers to stop investment into their economies. It's been especially prevalent in Latin America. One would imagine with Japan doing the same, that we'd see much the same in Asia as well. Korea and Taiwan are the obvious cases there, where they're going to be trying to maintain their competitive advantage over to Japan. And the key risk out of that is that we get a currency war turning into a trade war, which would be really bad for the global economy.
Bank of Japan Governor Haruhiko Kuroda said yesterday, while policymakers will continually monitor whether additional stimulus is needed, steps taken last week are sufficient to achieve the bank's 2% inflation goal. Do you think he's right in saying this?
That's an incredibly difficult question, particularly when it comes to inflation in Japan, because the Bank of Japan has for years been trying to get inflation up, but they've never actually successfully done it. That said, the amount of money being poured out of the Bank of Japan, and in terms of fiscal policy in Japan, should have a positive effect upon inflation. If we just look at the fall in the yen, it's fallen 20% in trade-weighted terms since Abe came to power, and many people in markets expect it to fall another 20%. That will definitely have an impact in pushing up inflation just because of the input price impact. We've also got the fact that the break-even inflation spreads, which you get out of the inflation index bonds in Japan, they've jumped about 1% since the end of March, which is an indication that markets expect inflation to rise as well. And as I said, the huge amount of stimulus should have an impact sooner or later. If it doesn't, then we're back to that point I made earlier. We're in the situation of kitchen sink economics, and you wonder where they go from here.
That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates. Goodbye for now.